What is going on, everyone? Welcome back to another video, another day, another dollar. We're breaking down our futures contract per usual. Today was a pretty much definition of what a failure at an inside day up looks like, okay? So in yesterday's video, we were talking about how the potential, because it was an inside day, we had a potential for coming out of an inside day to the upside or to the downside that could lead to a pretty good excuse me, could lead to a pretty good move one way or the other. And we're currently, in some type of consolidation, right? We have gone from up to balance in the daily time frame, as we have now two daily time frames within the same, three different time frames within the same range, essentially, on the daily. So just getting some consolidation, trying to find acceptance above 4,900. And in yesterday's video, we were talking about how, if we open above 49.14, the likelihood of going and taking out the day's high and getting an inside day up was pretty good. Well, we got that. We set a new all-time high at 34.25, and then we attempted to go trend, and this was kind of the nuance of it, right? This is why, looking at the larger time frame and understanding profile terminology and just kind of understanding the nuances of profile and volume profile and how it can help you kind of gauge what the market's trying to do. Well, here was a clear example, right? We're coming out of an inside day, try to go trend up, okay? Knowing that we don't hold trend very, very well in the sense of holding single prints. We only have 2 days so far this entire year, rather the entire month. Only 2 days the entire month that have gone trend up since we started the trading year. And today we failed once again to go trend up. Once we filled the set of single prints here and couldn't get back up to the day's high, the liquidation that we had in G period was kind of, you kind of could see that happening, especially once G couldn't get back up to at least 26.25. 26.25 is, it's a tough area to be at. In the sense of, like, we were trying to move point of control up. We had it initially at 24.75. And for those of you that don't know what point of control is, that's just where the most amount of time frames closest to halfback. So the halfback being the halfway point of the day's entire trading range. So the widest point being how many time frames we've gone through that time, or that price. And at the time, we were just 3 wide. Okay, we were 3 wide here at 24.75 prior to going trend up. We pulled back, couldn't get 4 wide, so that was a plus. However, we were still holding single prints. But then the next time frame open, couldn't take out the day's high, filled the set of single prints. So now we get 4 wide down here, okay, closest to halfback. And then we try to move point of control up. So buyers want to see point of control go from where I'm about to mark, right, where we touched 4 times prior to this liquidation move, okay? So we traded back and forth 4 time frames prior to this move at 24.75. Then we couldn't get there in this time frame right here. So A, B, C, D, E, F. So an F period. We couldn't take out G's low, but we also couldn't take out the day's high. And in doing so, we attempted to bring point of control up, because now the widest point of control is they're trying to bring it up to 26.25. So you got to start thinking ahead, right? So now buyers want to move point of control from where it's at right here at 24.75. They want to get 5 wide up here at 26.25, right, in order for this day to really start getting more legs to the upside. Well, they failed to do that, right? You can see in G period, we couldn't get up there. Instead, we get 1, 2, 3, 4, 5 wide down here. So we keep point of control down here. And then once we took out these lows, seeing that we failed at all-time highs and we were beginning to fail at an inside day up as we came back inside of the previous day's range, right? Once we closed back below 26.50, right, in G period, the long game was kind of over, especially since we were 1 time frame down initially. stopped it, began to one time frame up, stopped it, stayed in balance, and then we began to one time frame down again once we took out these lows here at 25 and 23.75. We began to one time frame down. At that point, with how frequent this market so far this year has taken out both sides of the initial balance. Now, keep in mind the initial balance being the first two 30-minute time frames, right? So because we know how frequent, especially, back here on this day, we did that. Trying to find another example of where we took out both sides. But just know it's happened several times where we've taken out both sides of the initial balance. So the likelihood of that so far, I mean, it's like 50-50 chance, 60-50 almost. So pretty good chance. So getting long, okay, I can see it, right? You can get long, but you got to have your out. And then once these buyers started to get stopped out, liquidation just came in, and we got below the open and stayed below it for a few time frames, setting new lows on the day, and then just kind of remaining down around that 49.17 level, where we created a 9Y point of control. So point of control got moved from up here to down here. All right. And then whenever the market did have a little bit of a rally, because point of control had been moved from up here to where it is down here at 9 wide. At the time, it was 1, 2, 3, 4, 5, 6 time frames, 7 time frames. So when we pushed up, right? Okay, maybe you didn't want to get short right away, but in the next time frame, right, against that high, this is a great short opportunity to come down here, get 8 wide, right? Because you couldn't get 8 wide up here. You couldn't get 9 wide up here, right? You only have 2 more time frames, and we were only 5 wide up there. So the most you could have gotten is 7. So the likelihood of rotating back down to this point of control down here at 17.25 was very good. So you're risking, you get short 22, you're out 24, you're risking 2 points to come back down to 17, 5 points. So you get a really good risk reward trade there. And even if you were looking for the day's low, I mean, you got pretty damn close to it, or at least value low anyway. So good risk reward trades, but having the nuances and understanding, like lowering, raising points of control, seeing how we failed at an inside day up and then came back into the day's previous range. What you wanted to see as a buyer when we pulled back here was, okay, maybe we pull back, we take out 23, we hold 20, we hold above half back, and we hold above the open, and then we rotate back up, kind of getting rejected out of the previous day's range, and then maybe you go and make new highs. That wasn't the case. As we closed below the previous days and then found acceptance back into the previous day's range and value area, and then just kind of, did nothing the rest of the day. Another thing to note is understanding where value is. Value has technically not really changed. Yes, it's changed from the previous day, but if you look at where we're at and where we're trading, we're basically trading between 49.35 and 48.95. So we are in a balance. Value is not changing any, right? What you want to see as a buyer's value clearly become higher. You don't want to see overlapping to higher. That just signals not as strong of a buy, right? So you want to see value move above 30 and then continue to move up higher. Today it was only overlapping higher. The previous day it was overlapping lower. So value is not changing. Nuance, right? Look for these as a trader. And in my opinion, because we're still trying to find acceptance of 4,900, we're getting a bit of consolidation. We are up in the monthly, the weekly, and the daily right now. This consolidation is healthy, and it could continue to grind higher and make new highs. But I'm willing to bet, because of the lack of volume and conviction so far above 4,900, nobody's really wanting to be the first to set new highs up here and really get to going. I think maybe the likelihood, especially after seeing this non-wide point of control and then having a lot of time frames between these last 3 days trading right around that 49.15 level, I would like to. I wouldn't like to think. I do think, and this might be me being biased. I don't know, but from what I'm seeing, I think the market is is kind of due for a little bit of a pullback. Maybe we come because we've gone from up to balance. I think we'll come out of this to the downside now because we clearly failed at an inside day up where we could have had a really strong push to the upside, but failed miserably once we got back inside the previous day's range. So now I think it's time to test the other side. And if we find acceptance below 4,900, then these lower destinations here are going to be, your target, especially this 9Y point of control down here at 48, 82, 25. Okay. And then at that point, we'd be one time framing down on the daily. And it's not unhealthy, right? But that's just kind of what I'm seeing from my perspective. If you guys see anything different, let me know. But I just kind of wanted to talk to you guys about just the nuances of, how a volume profile can and just market profile can help you. And if you guys want to know more about these things, go check out camelbacktrading.org. Look up Paul Asmar on YouTube. He's a great mentor, great trader, and he'll if you join the Discord, everything you learn and from him and everybody in the room is just it's the value of it should be way more. The fact that it's $30 a month is ridiculous. It should be significantly more. He live streams his profile. He's just a great guy, and great trading mentor. But over the last 2 years, trading with him and learning the nuances of profile, like I'm able to see the things that he is seeing, and then maybe become a little bit more of an innovator in the sense that he's probably looking for this market to continue to push higher. But from what I'm seeing with the market failing at what it tried to do and attempt to do, right? It failed. Yes, it's important that we're holding, right? But what we didn't do is we didn't go trend up and have an explosive day to the upside. So we're kind of just rolling over and sucking wind here. And I do think maybe if we get acceptance below 4,900 because we're having a hard time finding acceptance above, and granted, we have had a lot of time frames, right? We've traded a lot above it, and I could be proven wrong, right? There's two sides to the coin. Because, like I said, I'm not discounting the fact that we're up in the monthly and the weekly, and the probability is much higher to continue to one time frame up on the daily, right? And continue to stretch the yearly highs, all-time highs. I'm not discounting that. Yes, it is greater, but from what I'm seeing, I think the likelihood of pulling back and one time framing down on the daily is also good. I haven't traded any of this. This is pure chop to me. What I want to see is kind of a day like this, right? Where we have a good directional move where you can get in the market on pullbacks, scalp out a couple points, get in the market, scalp out a couple points. Right now, the market's not ripe for long-term holding, right? You want to get in, you want to get out, you want to stay married to the position until the stats for trend days change. I'm not holding positions very long. I'm getting in, I'm getting out. So with that being said, let's look at the larger time frame. Sorry about that little rant, but I think that's very important in my opinion. Here it was the daily bounce that we were in. Okay. We broke out of that. We've been one time framing up 1, 2, 3, 4, 5, 6 days in a row. Okay. One time framing up 6 days in a row. Healthy market, right? But if we take out, because I'm still saying that the market's going from up to balance, if we do take out this low down here at 87, will be one time framing down in my opinion. Or 89, excuse me. If we take out that low at 89, we'll be one time framing down in my opinion, because I think right now the market is in a balance, and I'm going to actually indicate that by setting my balance here at 34.25. So if this thing would let me edit, I'm just going to go ahead and mark these balance highs. And what I'm considering my balance low. 38.89, right? 38.89. Yep. So right now I'm calling the daily balance. Okay. Calling it up to balance. We haven't technically gone balanced by taking out a previous day's time frame, but because we've had this consolidation for the last 3 days, or last 2 days rather, I'm going to say it's up to balance. And if we take out that low at 89, we'll be one time framing down. If we take out 34.25 and get good extension, we'll continue to one time frame up. Weekly, just review that. Weekly time frame. Then one time framing up 2 weeks in a row, right? Good extension, still healthy. That's why I'm saying I'm not ignoring the fact that the probability is higher that we continue to one time frame up on the weekly, the daily, and the monthly, but just noting from the smaller time frames the weakness that I'm seeing. Okay, I'm not taking away from the buyers, but I do think we are due for a bit of a pullback at some point in time. Monthly, healthy, one time framing up 2 months in a row since coming out of this balance and setting all-time highs. We continue to do that. We should target 52.60 at some point. Like I said, maybe next month we have a bit of a consolidation inside month and then come out of it to the upside at some point in time in the future, as this month's range is pretty large. Last month's range is pretty large, but we could easily continue to push up higher until we get above 5,000 or reach that 5,000 level, and maybe see if that's where the bulls kind of halt. We do have earnings, so that could also throw a wrench in things. And then I do believe we have the Fed at some point in the future. But with all that being said, ladies and gentlemen, I hope you all take something away from that. And like I said, if you want to learn more, go check out comingbacktrading.org. Paul Asmar, ASMAR, at YouTube or on YouTube for just all your trading needs. We'll catch you guys in the next one. See you.